Guten Tag. Good morning, everybody. We're all Germans this morning because we spent half the morning sitting on YouTube watching the German Bundestag and this bloody vote, only to find out it's not coming till 1 o'clock, 1:30 later on this afternoon. So, just brushing up on our German. Not that I know any anyway, but there you go. All good fun in German Parliament. Hope you're doing well this morning. A fairly quiet one yesterday, thankfully. I don't like busy Mondays. But we'll go through the headlines and then get a look at some of the price moves. Over in Japan, there's just this has been bubbling for a little while, but there's a few more headlines coming around about it at the moment. It's regarding PM Ishiba, and his popularity. He's facing lower and lower popularity polls over in Japan, and now he's been caught up in the middle of a gift scandal, if you can call it a scandal. Apparently, he gave out some vouchers, gift vouchers, to what are, I think, young party people, interns, whatever, which he paid for out of his own pocket. Didn't come out of government money or anything like that. 670 quid these vouchers were for, but that's kicked off over there in Japan. It's got people questioning his popularity, whether the other parties are going to call a no confidence vote. You may recall that him and his coalition don't have massive amount of votes in the lower house. Long story short, there's a bit of political rumblings going on in Japan that may develop into something or may not develop into something, as the case is with politics. But that's something that's bubbling under the surface, so just keep your ears open for those sort of headlines. The upper house vote, the big one, is in the summer, so there's a lot of eyes on that as to whether he will stay in power or be ousted or replaced or no confidence voted or whatever. But that's going on anyway. I'm not saying that's behind this rally in Yempes, but it might be having a little bit of influence anyway. Goldies, they say that Japan's wages need to rise further to meet the BOJ's goal. They're saying that things are not coming in as expected. They need higher wages to get them, the BOJ, ticking over again. Over in Australia, RBA's Hunter says the RBA board is more cautious than the market on further easing. They say they are focused on US policy settings and their impact on Australian inflation. So looks like we shouldn't be in a rush to look forward for another RBA cut. Swiss National Bank, Reuters poll has everyone thinking that they're going to be cutting rates by 25 pips, although they see the risk of negative rates as low. If the SNB do cut on Wednesday, they'll be cutting down to 0.25%. Which puts them one cut above zero. And given that inflation is looking very, very weak over there, you probably couldn't rule them out going to zero and maybe going negative again. They are coming off a different bar than everyone else. They didn't see inflation running as high as everyone else in the 2022 inflation spike, nor did they take rates as high as everyone else. So they are at risk of getting to zero and maybe going negative as well. It looks like UK Chancellor Reeves is sticking to her guns and taking the hard line in her spring statement next week. She was popping up on Bloomberg and various other places to say she's going to do what she needs to do because they need to get a grip of government borrowing. So she faces a big bun fight within her own cabinet, as well as other members of her party. We shall have to see whether Starmer needs or wants to step in and just get her to tone it down a bit, because she's sticking to her guns. That's one thing, but what she might announce, the market may not like, as well as her own colleagues. So she could be on the firing line once again. I did my trade-off recording with Mr. Brown yesterday. This was one of my subjects. I'm getting a bit fearful for the quid into next week. I can see this as potentially being a bit of a mini Liz Truss quasi-quirting moment. in terms of how the market feels about confidence in Rachel Reeves and her policies, and whether they can be achieved or whether it's going to stymie the UK economy even further. So next week is not so much about the details. It's going to be about whether the market has confidence in Reeves after she announces whatever she announces. And if the market doesn't, I think the pounds could be in for quite a bit of a whack. So we'll keep an eye on that one as the days progress. The German Constitutional Court has rejected more attempts by various independent and smaller parties to stop the vote on the debt brake. That Parliament session has already started, as mentioned at the top of the show, but we're not going to get the votes until they won't start until around 1 p.m. GMT, UK time. There's going to be several amendments that are being put forward by various parties, so they'll have to all be voted for or against, and then we'll get the final vote. So any time from 1 o'clock, I don't know, for an hour, maybe 2 o'clock, whenever it takes place. So if you're trading the euro, you need to keep that in the back of your mind, because we could get a reaction to that when it happens, and depending on what happens, whether it's passed or not. Bit of data, I haven't even got rid of that yet. Let's have a look at the zoo that was out this morning, and that's fairly important because this was potentially the first number to come out since the announcement of all those fiscal measures, and we get to see whether firms were happy to believe what was coming. As you can see there, current conditions came in worse than expected. Minus 87.6, only a mild improvement over the prior minus 88.5, and missing expectations minus 80.5. So still not looking good on the ground at the moment. Expectations, some had this expectation number as 48.3. So we did go up only 3.3 points, 3.5 points and this is the expectation survey. So this is what firms think about the future. Not exactly a big jump given the 500 billion that they're supposedly pulling out of thin air to help with this defence and investment fund. You would have thought you might have seen a bigger reaction than that. Zhu said the brighter mood is likely due to positive signals regarding the future of German fiscal policy. I think Mark summed it up best in our chat room. He said things are still shit, but are even more hopeful they will get better. So that's about it. They are slightly more hopeful things will get better. We'll see if the IFO survey, whenever that comes out next, shows a better picture. Eurozone economic zoo. Again, this is the expectation number, also improved to 39.8. Missed expectations, but still a ramp up. So all that fiscal noise is seemingly getting expectations, optimism rising in the Eurozone as well. Let's see if that falls flat on its face. ECB's Ren says growth in the euro area is picking up gradually, and says risks to the inflation outlook are two-sided. Yesterday's big data from the US was retail sales was expected to come in positive. They did by and large, although the headline number missed expectations, coming in at a lowly 0.2%. However, this one, the control group, which is core sales, every things, cars, autos, gas, that sort of thing stripped out, smashed expectations, coming in up 1%. So that made the report pretty good overall. Okay, it was positive overall, despite the miss on the headline number, but that number really shows that we're still yet to see the consumer looking like he's in any real trouble. She looking like he's in any real trouble. I was looking to see if we got another soggy one, because that probably would have put the cat amongst the pigeons in terms of the Fed staying on hold. But the Fed can look at that data, and no real need to change anything at the moment. Later on, or just after that, we got, or at the same time, sorry, we got the Empire State Manufacturing number coming in a shocking -20. It was only expected to fall -1.9, -2 points. but it came in an actual shocker. But this one has been very, very volatile of late. It's been up and down, been up and down. Among the details, though, employment stayed in the negative at -4.1. However, prices paid was up 5 points to 44.9, the highest in over 2 years. Prices received was up 3 points, the highest since May 2023. So we're getting those price pressures that we've seen in a lot of surveys now, including the ISMs and the PMIs. We're seeing some higher inflation pressures coming in across both the services and manufacturing sectors, and that's matching obviously what we've seen in the consumer sentiment surveys with higher inflation expectations. So there is a theme for prices, at least on the expectation front. That might be something that Mr. Powell will feel he needs to touch on at the FOMC this week. US business inventories came in as expected, up 0.3%, turning around last month's minus 0.2%. The NAHB housing market index, which can be a bit of a front runner for the housing market, dropping back to 39, was expected to come in unchanged at 42. So that might indicate we're going to see a bit of a softness coming in the housing data, which we get this week as well. Deutsche Bank picking its moment, of course. Let's just get the S&P up for this one. Because have they nailed the bottom? I don't know. We'll see. They think there's another 6% to go in the market sell-off for the US as the consumer and corporate confidence nosedives. At the moment, we're looking like we're bouncing a little bit. Let's go into a bit of a wider chart. So it wouldn't be the first time that they got something wrong and managed to pick the bottom of something after calling for it lower. But we shall see. We've moved off these lows and we're keeping off these lows at the moment. We've got this old zone that we're turning around right now. But they think it's got another 6% to go. US Energy Secretary Chris Wright says we're going to see a lot of pipelines get built. So another reason not to be piling into oil longs just yet. We've still got the drill baby to come. Over in the Ukraine stuff, this Putin-Trump phone call apparently is going to take place between 1 o'clock and 3 o'clock this afternoon UK time. So that'll be coming in right amid that potential voting in Germany as well. So, double risk for the euro there. Putin's been out this morning. He said to want all arms to the Ukraine halted in this 30-day truce. At the very least, a pause in all of US aid to Ukraine during this truce period. But we'll see what comes of that phone call later. That's about it on the headline front. As I say, fairly quiet Monday, thankfully. Nice easing into the weekend. All right, so let's get stuck into it. Euro first. We've had a little bit of a break up. We started to look like we're having a little bit of break up. We got above this 109.40s level. Finally, we had a little tap up there previously, and we had a little move up again today. Looked like it was off to the races. Couldn't quite get up to the 60s. Now it's easing off a bit. I think we've probably got one eye on this election stuff and maybe this Trump phone call. So we have made a new high. That's positive. We're just holding this 30 area at the moment, which I just highlighted this morning, just a sort of intraday level that we kept resisting against, and now we've broken above it. So holding here will potentially keep the momentum going. But I wouldn't rule out just some moving around while we're waiting for this vote. This German vote, it should give the euro a lift once it's passed, if it passes. Obviously, if it doesn't, we need to see what damage comes from that and whether this causes a big breakdown of part of the reason why we went up. But if it does pass, I think you've got to be careful, and any rallies you get from here, they need to hold. Okay, they need to find support at the broken levels, or else we might just have a bit of buy rumour, sell fact going on in this one. So if we do break higher, who knows? We might even get a walk up to 110 on a positive number or positive vote. That's the next big number to get. We've got this 109.60, then the 110. That's going to be big enough on its own. Likely we're going to find a bit of selling interest into there. The euro sector, when you get the odd day like this, it doesn't like to bust too many levels that quickly. But if we're sailing above 110, I'd be happy because I'm still long. But yeah, even though I'm long, I'm always like to try and be objective with price moves. It's easy to go, oh yeah, I'm long. Oh yeah, I'll wait for 112. It's going to happen tomorrow. That's not the way I think. Yeah, I'm in a good position. I'm running a good position, but I still want to know where my problem points are. I still want to look at where the trade can still go wrong or stop continuing to go right. So 110, if we're above there, I want to see it holding above there. If we just have a little spike through and then we drop back down pretty quickly, we're going to need to hold 60s, 40s, 30s, 109s again, or we just end up back in this box going sideways a bit more. I also don't know what's going to come from this Trump thing. If we get an announcement of a 30-day truce, we could see risk rallying a little bit as well, depending on what it leads to. But depends what conditions are attached with it. So there is reasons to see the euro running higher on the risk front, but there are also potential for bad news and we head all the way back down. Dollar yen and yen pairs in general all looking pretty bulgy this morning, all looking pretty well. So again, this might be a little bit of a risk play going on here. Obviously that Shiba stuff might be featuring, but this could just be a risk on move as well if we're going to get a bit of peace coming from Ukraine. That'll be good for risk in general. Now, yes, Dereja, I'm just about to get to gold. Now, one of our roomies asked about gold and silver this morning, and what's driving this, or what's continuing to drive this higher and higher. Two things. Firstly, the easy stuff. We've had a technical break. Okay, we had resistance up at 29.50s. We broke that. Everyone who's been shorting into here and making money on the short side against this level were getting stopped out in this move higher. You probably got a lot of longs who exited out once we couldn't get through this level. Well, they're going to be piling back in on the break as well. So we get the push back up. We then had the psychological level at 3,000, which we messed around a bit. Dips shallow. Now we broke it. So now we're getting that momentum of buyers coming back in and pushing it through. On the other side, we know that China's back in buying. But the third dimension is that gold, silver, other commodities like copper, they are used in weapons. They're used in missiles, not so much, components are used in circuit boards and all that sort of stuff. A lot of the time because of their heat resistance and whatnot, and compound structures and everything like that. So that might be one of the other reason why we're seeing this rising as well, purely on the use front, because if there's going to be all this defense spending, there's going to be all this rearming, building, production, then that's going to potentially mean a take up in metals, commodities, gold, silver, copper, all the way through. So you've got several factors leading to the reason why we continue to go higher. What's going to be key for gold, though, is if we get some risk on headlines. If we get a truce in Ukraine, okay, that may lead to a longer standing peace deal, agreement, or whatever. What happens to gold is going to be very important. Is it going to stop all this defense spending? Probably not, because for one thing, they've got to restock, if you like. But on a risk basis, I'll be interested to see whether gold pulls back on those headlines, because if we're stopping a war, that's one big element of risk that will come out the market, and that's a reason why people buy gold. So what gold does on any peace deal is going to be important. If it doesn't pull back on that, then we're heading higher. but it could also mean we see a decent top put in if a lot of this is risk trading, which we know that some of it is as well. Levels wise, still not ready to pick a top. 3K is probably going to be your support now. We've had, let's see, I'm into a shorter one. We've just had a bit of tentative support coming in at the 3K mark after the break. So that's the obvious level that we need to hold on any dips. Then your secondary line is down here at 29.80. Then your big level at 29.50.55. But as far as where the top goes, well, we've got a high, but you want to see something more developing. You want to see this sort of price action developing over a good period of days where we hit a high, pull back, test the high and hold it. So your gold shorts, you're shooting into the wind. You're just guessing if you're trying to short at the top here, wait for some price action to give you the evidence that it's time to short. Otherwise, you just end up doing money every time it rallies to new highs. Okay, and then when you do hit the top, you've got to get all that money back just to break even. So if you have 3 attempts at shorting this at $20 a shot, that's 60 pips you're offside, and you've got to get back on any dip. Okay, so just wait until you get the time to short it. The Aussie Kiwi's doing well. That's looking potentially like it wants to head a bit lower. I said about this 109.45.50 area, which we've been nudging against all morning. We had a little dip under, not quite got through that 45. It's back above, so this one's still going. The big, I say big break, the decent break from 110. Haven't really had a test, which is good because that shows you that sellers really want to push this lower. The bounces have been very weak until we're getting above here, 109.70.75, more so up to test 110. Then this phase at the moment is looking still pretty bearish and wouldn't rule out a move down to the 61.8 fib area. Again, it's also been a prior support point down there, 109.30s. So I've had a couple of slices off 80s and this morning 57. I'm going to be thinking I might just start pulling my stops down there, maybe down to just above this 110.50 area, just to start protecting the rest of it. Dollar MEX is looking a bit bulshy this morning. It held the 38.2 fib in the end. It's had a couple of little looks underneath it, but we couldn't hold below it. And now we're seeing plenty of support against it. Now up back testing this 20 level as well. I still remain short in this one, see what it wants to do. I was still thinking it wasn't really going to do a massive move to the downside because we've still got tariff risk coming in. Still got tariff risk coming in towards the end of the month. But I want to see what rallies do and whether sellers are still happy to come in. So this 20.01 area was a level on the way down. It's becoming a level on the way up. Next up is the bottom of that zone, 20.09s. So again, a level on the way down. It's been good, strong support. Let's see if it holds on the way up. I'll have a look at the Swissy. Not that it's doing an awful lot at the moment. Again, keep an eye on this one for risk. Because if there is good risk news, then you're probably going to see the Swissy getting sold off. So this one rallying a bit higher might go in sympathy with what's happening in the euro dollar. But obviously, this tends to move opposite to what euro dollar does. So it just depends which is going to be the bigger driver. Euro Swiss looking more bullish. So you'll probably find in a risk on environment, dollar Swiss might not do an awful lot. It might even head a bit lower. Because Euro Swiss will be the one that's rallying in this pair. But we're still stuck between these two fibs, the 61.8 and the 50 retracement, pretty much 90, 100 pips between the two. So if you're trading this one, if you want to be long, then you want to, if you can't get a dip into that 50 fib area, and be careful if you get a dip and why you're getting a dip. Because if it's a risk off move, then I wouldn't fancy trying to catch a knife. But if it's not real big news, we're just getting the move down there and we're holding there and you want to get long, then that's the area to do so, and you know where you're going to be wrong. Conversely, I'll be careful shorting against this area if you're looking for that side, just if we get good risk news, because we're probably going to be blasting through there and then maybe heading up to the high 96s, bit of a level, then maybe into the 97s on that one. Aussie dollar, I looked at Aussie Kiwi, but Aussie dollar, it's, again, we've got a little bit of disparity between the regions. You know, we're seeing euro dollar breaking up again, but Aussie dollar still seems to be struggling and really can't get back up to that 64 level. This high we came in right on the 38.2 of this drop. So we've already had euro dollar going up through its 38.2 of its drop, but this one's still looking pretty weak, and we've got this old trend line, K-Man's old trend line here around that 64 level. So this is going to be a big one as well, and if we break above there, and this will be a second time we have a go, again, I'd want to look for confirmation. So look for a break that is actually holding through that level, rather than just a fast move. I don't know, mate. I'm because I'm short Aussie Kiwi, I don't fancy being long Aussie dollar, but I might look at this one for a bit of a break trade. But it depends how it comes and the reason for it. Dollar CAD, I'm also keeping half an eye on, because we are just nudging the bottom of this range. I've been thinking about maybe dropping a bit of a bid in against this zone here, because it's, as you know, it's been a pretty solid zone, but we have cracked it a couple of times recently. So I wouldn't rule out a move lower in this one. Again, maybe a bit of risk move coming for this one. It'll be tied in with what happens in Ukraine and what that means for commodities and whatnot. But again, this one still faces the tariff risk too, although the market becoming a bit numb to all those headlines. But this is a key area here, 65.70. So keep an eye on what that does. If we're breaking through there, we've got this secondary level down around 42, 30, 40. And then maybe we're heading back towards these lows. Again, I'll probably look at this one. If we're breaking below, you want to see a confirmation rather than just going straight in with a short on a break. But if you're going to be trying longs against this one, then you don't need to have big stops. You don't need to have 100 pip stops in this one. Maybe if you want to stretch it just to below that low, in case you're wrong, because if we're breaking that, then we probably are going to head towards these lows here down there. We've got Canadian inflation coming up, Michael. Let's have a quick look at that, see what's expected. So inflation expecting to go up 2 pips, 2.1%. And let me check the core number, the Bank of Canada core number, which is, if I can find it, where's that gone? Nope, can't find it. It should be on here. Is it on here, the BOC core? I think that might be it. So this is the one that the BOC look at. So no expectations, but it was last at 2.1%. Some of their other measures, the median trims and whatever, looking around about coming in unchanged to maybe a pip stronger. But that headline number going up 2 pips. The BOC might be closer to a pause now. Now they've got rates bang in the middle of their neutral range. So they have said that they're going to be taking it meeting by meeting. So if it's a hot one, that will probably get the market thinking more about a pause, and you might get the CAD gaining on that basis. Data to come later on. There's that building permits, housing starts data coming up later. So keep an eye on that one as well. And we get some import-export prices, which are probably going to get thrown around a bit by all this trade stuff and front-running tariffs and whatnot. So that could be another volatile one in there. Right, anything else for anything else, Bran? You want to look at cable? Yeah, we'll have a look at that one, because we trying to break up through this 130 level. but we're not really managing it. We've got a few pips above it, just around 5 pips over, 4 pips, 5 pips over, but we can't cement a break. So it's still looking very undecided, shall we say. When you want to see a break, you want to see it kicking on and going, but this isn't doing that. Doesn't mean it's not going to go, but it might be more of a grind if it does. As I like pointing out with cable, a lot of the levels are around the half marks and double O's, big figures. So the 45s, 50s, and the double O's. For me, that's the next level. If we do get through this 130 level, we got this bout of resistance up here, 130, 45, 50. Again, an old level that we've messed around with before. Then we're getting up to the 131s, 131.10 an area, and then again 40s, 50s up here. I have got a big level up here, 131.70s, which, as you can see, we've had a few little points around here, but this is one of those funny numbers, if you like, but it's one of those long termers. Okay, so it's a level that we've had a lot of action around, big action around, going way back. Probably call it into the figure 132 as well, but it is a big old level, so keep an eye on that one if we do continue higher. As far as support goes, we're making all the right noises. Okay, so we had this series of highs, little series of highs here around this 65, 70 area, and we've just broken above it, and now we're holding it. So that's given it the springboard to keep 130 in the crosshairs. As for the rest, it got these, again, the half figure just started showing up as a bit of resistance, and then we broke it. So a test there might be where you want to be looking for it to hold. Then we're getting into 20s, then we're getting into 129s. Okay. So this is all just short-term stuff, but these are your levels you want to keep looking at. If we're breaking below there, then, you know, we are going to wash out this move, and 130 probably becomes a bit more of a top going forward. But again, look at this from the risk point of view, and keep in mind that UK stuff, the budget stuff, coming next week. Euro sterling, similar theme. We're just faffing around with this zone at the moment. So it looks like he's just waiting for another driver to give it a move elsewhere. I don't know whether we see this one rally if we get a positive Trump-Putin phone call. It might be that we see the euro outstripping the pound, but geographically, they're all in the same boat regarding this war. They're all pumping billions into Ukraine. So it could be that we don't see a speed move between the euro and cable. So this one stays steady, but we might do. If the euro decides it wants to outstrip the pound, then this one will probably be heading higher. But that'll be a speed move more than a fundamental move. Right, anything else, you boys and girls? Before I move on, shall I go back and look at, let's have a quick look at yield, see what's going on there. Not an awful lot. Still holding below the 734 area. Again, we're in the Fed orbit, so likely we're not going to get anything massive moving here. But again, look at any risk headlines and see how that reacts in yields as well. Because if you do get a bit of selling in treasuries, then you're going to see yields going up on the back of risk on. And that might be a little bit of a trade. Again, something I was looking at with Mr. Brown, rally in yields, i.e. a drop in price. If you think that the Fed are still going to be cutting rates at some point, then any rally in yields is likely to get hit, dips in the bonds bought. So if you get a risk move that drives it higher, that might be a trade worth looking at to pick up a cheaper price in the bonds itself, because that's what we trade the price. So we've got some decent levels around here as well, down around that 110 14s area, down to 110 12s 10s. So yeah, the dip here might be find a bit of buyers coming in. Dixie, you want me to look at Dixie, Daresh? Seriously, mate, you know what I think of the bloody Dixie. You want to trade the Dixie, trade the euro. Go on in. As it's quiet, I'll have a look at Dixie, but I don't know what you want me to say about it. I can't I have to go and wash my mouth out after this, mate. I know what Dale's looking at. He's looking for potential rallies up to 105. But what do you want to do with it? For me, we're just bang in the middle of the recent range, give or take 103s. Okay, we're a bit more tilted to the downside, down towards the 100 level. But this is all just going to be driven potentially by risk later on, and then what the Fed does. For the moment, if you're talking about the dollar in general, we're still in a mode where the market is still looking for bad news, still thinking bad news is coming. Even some of the headlines outside of that retail sales report didn't paint them in a good light. Retail sales bounce, but confidence in the economy is still weak. So you probably see rallies in the dollar continue to get sold. Obviously, things like dollar yen is a bit of the outlier at the moment, but that's more a yen move rather than a dollar move. So yeah, for now, if you're looking at the dollar, probably still in rally sell mode for anything now. Right, that's it. Go and wash your mouth out. Go and eat a soap bar. Right, if you haven't got anything else, I shall call that a day. And no problem, Deresh. Always a pleasure, mate. Thank you very much for coming to the Flow Show, as always. So it's been a bit of a quiet one, but we'll have a bit more to say on Face later on, no doubt. Have a great day's trading, everybody, and I'll see you all tomorrow.